From the morning reading, Wall Street analysts are quickly and aggressively lowering earnings estimates for the S&P 500 companies this quarter. In the past 5 years, they've been this pessimistic 2 times, both of which saw stocks ultimately rally. Ironically, it could be worse for stocks if analysts were being aggressive and raising estimates instead. Second, the percentage of our indicators showing excessive optimism has climbed above 40% again. The only other times in the past 3 years that excessive optimism indicators have exceeded 40% were September 19, 2012, December the 31st, 2013, and February the 23rd, 2015, all of which preceded multi-week pullbacks. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:03 a.m. Central Time, and I'm recording this in preparation for the market day of April the 14th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive right in to the overnight action. Well, in terms of the 4 broad market indices, we are essentially scratch. You've got the Russell just up a teeny bit, and the others down a teeny bit as of the time of this cut. With crude oil, big move there, up almost 1%. Euro, scratch. Bonds, up about 0.4%. And gold, probably the biggest mover of the night, down 0.93%. And our over market, China up about 0.3. Hong Kong down about 1.62. Japan, scratch. Germany down about 0.6. And United Kingdom up just slightly. So pretty mixed bag here in our overnight action. Not a lot of direction that's going to be given to our current market open based on this information as of the time of this cut. In terms of macroeconomic reports for today, you do have several. You have core retail sales. That's a biggie. Certainly says an awful lot about what our current economic situation is. You also have XRT, the retail ETF, has been one of the strongest industry groups of late, so that one will be closely watched. You also have PPI, and both of those will be occurring before the market opens. After the market opens, you have business inventories, and that should just about take care of it for the U.S. markets. Now, something to keep in mind is before the market opens tomorrow, we're going to have a big Euro press conference, and that certainly could shake things up. So one thing to kind of consider as you go into your close today, do you have any positions such as a euro dollar trade or anything like that you might want to take some profits, or at least take a look at your current positions prior to that happening. In terms of macroeconomic reports for the United States tomorrow, you have Empire State Manufacturing, capacity utilization rate, industrial production, all on slate. And then after the markets open, you have a housing market index and crude oil inventory. So that's what's on the slate for tomorrow. In terms of our current volatility conditions, after yesterday we had such exceedingly low readings, we did have a little bit of an uptick. Now do keep in mind the VIX was in futures rollover period, so there was some inflated impact on the VIX yesterday that really wasn't about a whole lot of new fear coming into the market, though yesterday had some weakness to it with the S&P down about 10 points. But the short-term VIX about a 12.49. Certainly nothing to be scared of there. From a historical IV percentile, you'll see all these numbers are relatively low, but just simply not quite as low as they were at this time yesterday. Also notice our standard deviation moves. We're certainly starting to come through after a period of really almost excessive standard deviation moves. we've now kind of flipped over to a compression phase and really not going anywhere. I mean, it's one thing to be in compression and ranging and be oscillating fairly rapidly from top to bottom and back to the top. Lately, we've not really been going anywhere. So less than one standard deviation moves across all 4 broad market indices for the last 5 trading days at least in a row. So that we would be in tune to have an increase in volatility at some point certainly would also be in play. Don't forget we have tax day. There's a certain seasonality influence as people have to sell positions to pay their taxes. So that sometimes comes into effect. But following tax day, we would expect that there could be a strong second half to April according to normal seasonality setups. The other thing to take into account, of course, is that OPEX is also this week, so you've got a lot of influences that could be coming together on our seasonality impact of the week. In terms of our daily report, do have crude oil that'll be rolling over in a few days, so continue to watch your volume on front end versus back end on that. Not a lot of changes on this today. Market trend intermediate term continues to be phase 3, looking for higher highs and higher lows. Portfolio investor posture IBD status continues to be in a warning status, uptrend under pressure, though the GMI is a perfect 6 out of 6 with its buy signal that has persisted throughout this entire compression phase. Active trader market posture is bullish. From a position sizing opinions, we continue with the same 2 position sizing opinions. From an investor standpoint, long side exposure up to 50%. From a volatility active trader opinion based on the VIX, you have a acceptable window there, so that's actually calling for full position. Market timing opinion, you do have a 1-day and 3-day outlook of neutral, with a 2-day outlook a slightly bearish from that metric. Market posture is bullish across the slate, and all these measures improved yesterday, though there was some kind of within the internals of market posture some weakness. Obviously yesterday was a relatively weak day, and that certainly impacted the near-term measures of the market forecast. But primarily looking at the intermediate term as what we do with this set of readings, they're all bullish, all above 50, all pointed in the right direction, all telling us that new short-term and intermediate term trades are okay. From a hedge warning status, we continue to be at level 1. We continue to see some warning signals. Obviously, we've got the IBD status, uptrend under pressure. From our volatility metrics, we've got the daily VIX squeeze that still is present. Distribution day count is still high, though this continues to improve. Not too many days ago, this was a 9 on both the S&P and NASDAQ, and we've now ebbed off to a 6. And if that drops down to a 4, this will come off as a warning. Volatility ratio warning, we had fire a couple of days ago. Now it ebbed off a little bit yesterday, but certainly we've had a recently firing of that. And we have, well, on the good side, new highs, new lows. We had 321 new highs yesterday versus only 108 new lows. So even for a day of weakness, it was not reflected in the broad market all that deeply. In terms of intermarket risk aversion indicators, we still have the same situation. We have 2 as risk off, but one of those is setting up to potentially cross up and become risk on, and with the other 3 at risk on, that's starting to certainly improve. Option income strategies, opinions. VIX is inside the acceptable window, but you do have that daily squeeze. The daily squeeze, of course, could persist for some time, but at some point it is likely to fire, and that usually means increased volatility and a down market. So consider that as you determine your strategies and your setups. Covered calls, we're still on a neutral stance, fairly conservative with a 2-to-1 distribution between in the money and out of the money strikes. And then put selling, neutral, so acceptable for selling puts. I've got a number of them I'm going to be looking at today. Would love to take advantage of some weakness with an overall still bullish market forecast. And would look for a timing opportunity to perhaps take advantage of that. Just keep in mind that you should be doing this with respect to a position sizing that is in line with the size that you are willing to own, because if you end up seeing that this breaks down in the overall market and those puts become super hot, you want to be able to be in a position that you're looking to buy those stocks at a discount, and that this is not really the time to be super hot speculative in terms of put selling from a speculative standpoint. Caution certainly be exercised in establishing new opinions until we see a bottoming pattern form, and you have to weigh out whether this is an opportunity with a little bit of weakness to enter some positions versus that the market has clearly not been super bullish in the short to intermediate term in some time. In terms of our sector market postures, still pretty green. We had some weakness obviously come in. Transportation certainly reflected that. Utilities reflected that. Telecom and materials would be the next tier. But other indexes held up better, so not too much damage done here yesterday on any of the time frames, short, intermediate, or long. In terms of percent change, obviously you see there was broad market weakness with respect to all the sectors except for financials. Financials did pull out a positive day. Telecommunications was just barely negative. Industrials, though, and utilities and energy took hard hits, down about 1% respectively. Top industry: retail, internet, healthcare, railroads, biotech, transportation, pharmaceutical round out our top industry groups. So continue to watch those and for your watch list opportunity development. Well, that should take care of us for today. As always, greatly appreciate your reinvestment into us by liking us on your Facebook or YouTube, wherever it is that you're finding us on your social media platform. Additional information available at falconglobaltraders.com. Disclaimers as always. Just hit the pause button if you need more time to review this. Thank you each and every trading day and our market preview. See you at this same place tomorrow morning. Goodbye.